All right, ladies and gentlemen, I hope you had a wonderful evening. We are one day closer to the first rate cut in 4 years, and if you couldn't tell by now, the stock market is going to go crazy this week. So we got a lot to talk about. I want to recap what happened in the market today because we woke up to some pretty wild surprises that are really about to affect Wednesday. Literally, if we had the meeting tomorrow, you would have gotten a much different picture than what we were seeing last week, even though nothing has changed. But then we got to talk about some of the seasonality and what is happening both today as well as after Powell. And then I'm going to go over what is priced in for the week, because even though it is a big event and all eyes are on Powell, I think you're going to be surprised what the market is pricing in. So I have all of that. I have the keys. I have the plays, all the plays we made today. What I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we're live Monday through Friday, 30 minutes before open, youtube.com/thestackmarket. We will see you there in the morning, baby. Run it.
Working to the couch, it's the 2020 less. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, the first big key is what happened here from Sunday until today, and we had a little hint of it on Thursday and Friday last week, but once again, virtually overnight, there was comments from Bill Dudley once again. He did the same thing on Friday, talking about we need rate cuts, we need 2 rate cuts, and then all of a sudden you kept getting quotes on Wall Street of people saying we need more rate cuts, and then out of nowhere through Timmerhouse and Bill Dudley, virtually overnight now, we are pricing in 2 rate cuts. This is absolutely wild because, like I'm saying here on the keys, we were even talking about this yesterday. If you had the meeting tomorrow based on the current odds, if we took the odds where we closed today and the meeting was tomorrow morning, they would be cutting by 50 basis points tomorrow, and that is a big development and a lot different than most people were expecting. So this was very wild, and now this has been opening up the debate from today, and I'm pretty sure all the way up until it happens, you are going to be hearing people go back and forth on this is good, this is bad, this is good, this is bad. Everybody has their opinion. Some people are saying the Fed needs to catch up. Some people are saying the Fed is behind. The way I'm looking at it, if you go back through the last 20, 30, 40 years or so, anytime the Fed has opened up with 50 basis points to start a cutting cycle, that has been negative. That has usually led to a hard landing. I'm already believing it's going to be a hard landing, so I think 50 basis points is bearish. A quarter point, I don't even think they should cut a quarter, but I think that is a lot better, or it is more reflective of a mid-cycle adjustment like we saw in the early 90s as well as 2019. It's funny because a lot of people have brought up this soft landing of the early 90s and Powell's even brought that up. Well, the thing is, they didn't start off the cycle in 90s with 2 rate cuts. So that's why this is all interesting, because depending now on what happens, whether the retail sales and what we get tomorrow and how things play out, that might be able to move the odds. But if we come into Wednesday and the Fed futures are still looking exactly how they are now, like we were telling you guys yesterday, then we're going to get 2 rate cuts, and that is going to set the stage in terms of what we're probably going to be dealing with in this rate cutting cycle, and I think that's going to be negative. So we'll see how Wall Street takes it. Back in the day when you got 50 basis points of cuts, it's not like the market went down immediately. The market actually liked it and then turned sour down the road. So watch out for that. That is key number 1. We'll see how that plays in coming into tomorrow. And now key number 2, understand where you are right now. You are entering the second half of September. So to start off this week, little by little, I was telling you guys yesterday, you are about to get FedEx earnings on Thursday. You're going to get Nike next week. And then before you know it, all of these companies are going to report. But that means now you are entering the buyback blackout period. That means a little source of liquidity is no longer going to exist. And then the seasonal worst 2 weeks of the entire year, not just September. That begins after September 18th. So we're going to get Powell. We're going to see whether we do 50 or a quarter, and that's going to be the debate leading into it. And then you are now going to have liquidity slowing down and people getting ready for earnings as they respond to Powell. So we'll see how this goes. Maybe people end up liking it with everything going on, but like we were even talking about yesterday, right, as we get over this event, it's going to be watching the data for future signals, and then it's going to be all about the politics. So watch out for that. That is key number 2. And then finally, the last thing you need to realize coming into the next few days, and this is where I think things are surprising, and I think the market might go crazy off of this, because this is either going to be totally incorrect and the data comes in and we're going to get a big surprise and move a lot, or we're just going to have all of these numbers stay the same, but then ahead of the events, we're just going to start moving big. But what I'm trying to tell you is that we did the market pricing today on the option chain, and surprisingly, it is a small reaction. The market, the option chain, is only pricing in 0.5% for tomorrow's retail sales. Remember, I was telling you that's the last final piece of data. That will move the marker. So in terms of 25 or 50 basis points tomorrow, depending on that retail sales, if that retail sales is easy and a big beat or a big miss, people are going to use that to solidify the whole 50 or 25 basis points debate. But you would think that would be the big event. The option chain, the SPY, it's only pricing in a 0.5% move. And then for Powell on Wednesday, the option chain is only pricing in a 1% move. And then even if you go up till Friday, from literally today till Friday, the option chain is pricing in a 1.5% move. And that's absolutely tiny. If you guys don't recall, the jobs report and then the CPI last like 2-3 weeks ago, those are pricing in 1.5, almost as high as like 1.7. And those are just the jobs reports. So now the rate cut and all of this, it's not really pricing in a lot. So that means either these numbers will stay true and we move big ahead of the event, or we're going to get some big surprises. But it's definitely going to play out fascinating. So watch out for that. We'll see where tomorrow takes us. And then that's going to be the final step leading into Powell on Wednesday. We'll get the whole breakdown. I'll go over the SCP tomorrow, and then it'll be game time, and we're going to be live for all of it. But I hope you're ready. But let us get into the plays. So, right off the bat, I have a couple of different plays. I actually think we had a lot of fun today, but I've been sniping a lot of plays and not trying to do as many as we have been holding our good ones, and hopefully you like those TLTs, the ones we grabbed on Friday. We definitely woke up good to them, and I was telling everybody, if you are not really confident or you like to cry and complain if plays go green then red, you may want to make them free. Otherwise, make your decision now and push it. Remember, TLT and Powell, there's the move ahead of the event, there's going to be the move the day of, and then the move afterwards, and then that's going to lead into a lot of things. So that's just TLT, but as far as play number 1, FedEx, this was my first play today. I did do the 2 standard deviations, so it was 240 to the downside and 340 calls to the upside, but I grabbed way more puts than calls because this morning FedEx gapped up by 2%, and those calls were up like 60%, and the puts were down by like 40, so I figured, hey, let's go both ways, but if I want to kind of game some of the IV, even if the stock kept going up after the puts took a 40% haircut with earnings this week, I didn't think they would go any lower, so I decided to grab more of those, and then depending on what happens with the calls, we'll buy a couple of them. But the whole idea here, just like last time, make them free before the report, and if we could hold one for free, I will hold it. And then, like I've been telling you, FedEx, this is going to be the bellwether for the economy, or just one of these early indicators, and then considering it post Powell and the Fed, it may hold a little bit more weight, or it'll feel very, very fresh. So watch out for that. That one's going to be an important one. That is play number 1. Then play number 2, Intel, and I was very conflicted. I could tell you was conflicted, but they had a bunch of news after the bell. It was a huge news dump. Everything from them doing an Amazon like AWS cloud deal, making chips. They said multi-year, multi-billion-dollar deal. Then they announced more cost-cutting plans, selling real estate, closing certain plans, and how they want to manage some of that spin-off stuff and what they're going to keep with the foundry business. Then they gave a progress on how they're firing people and the cost-cutting. It was a ton, and the stock went up like 20%. So like I have here highlighted in new iPhone purple, see if it holds. We've watched a lot of Amazon or Intel events, and it kind of goes up and then gets clapped. It would be nice to watch it outperform, especially after the rate cuts. If you kind of notice some of those values get that bid, then yeah, but if this sells off after a couple of days, then bah humbug. Otherwise, if it does get legs, this could be good. I wanted to play it after hours, but I'm still in let the dust settle because, again, all this news, this isn't the dust settling. This is just action left and right, volatility, big move. So should be exciting, though. We'll see what that brings with the data and how it moves with everything considered. So that is play number 2. And then finally, play number 3, man, commodities and Bitcoin. And keep a major eye out for these two sectors following the rate cut. Not only, again, we're talking TLT and leading into it the day of and then the day after. Well, I think the same thing applies to commodities and Bitcoin following the rate cut. There's going to be plays before the day of and then after. And I think oil is going to say a lot post rate cut. And we've talked about a lot of things. And literally, I've been telling you, if oil does end up going up after a rate cut, that's not going to be good. If commodities and oil could stay down, maybe you will get your soft landing. But the other part about Bitcoin, they also respond to rates. And I said this prior, like even with how Bitcoin has kind of rallied back after the whole SBF thing, I thought that was weird because I'm more used to Bitcoin in a low rate environment. Most of Bitcoin has existed in a low rate environment. So let's see what happens after we get those cuts. I definitely think that'll be very interesting to watch. And then keep an eye out for REITs too. That is another sector that could benefit from all of the stuff that we got going on this week. So watch out for that. Those are the main plays. As far as everything else, the only plays I made today, I played FedEx both ways, and then I grabbed EW off the news pop. There was like $5 snakes, so small one, but again, kept that one small off the news, and then just really FedEx, and then getting ready for TLT and everything else. Holding the oil. I am holding the ZQ, and I think I'm going to hold that play after Powell with, if you guys remember the /ZQ, the Fed futures, I literally have that future. I've been playing that since like the last Fed meeting, and surprisingly, it doesn't expire till after. So if they do cut by 50, I could benefit tremendously off of it. And with how people are, that play has gone from like break even to literally, I was like up 1,000 on August 8th. Then I went back to break even on Thursday. And now I'm back up on it like $200, $300, which is a decent amount considering the margin requirement on this contract is like $400. It's really tiny. So these are pretty big moves. And that's why I'm saying coming into Powell, I may want to hold that. And really just the whole rate plays, TLT, that 105, the 3.5, where things are going to end up. I think that's going to be the main focus. So we'll see where that takes us and get ready to react. But that is your watch list, ladies and gentlemen. Make sure Hydrate Healthy ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, baby, don't ask for a bigger sign in life if you're ignoring all of the other ones that are right in front of you. Oh, my goodness. Chatadonia. So I hope you're locked and loaded. Stay hydrated and healthy. I'll see you in the AM and Horn up.